On Squawk, I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. Tonight, Mohammed Nalla from Nedbank Capital and David Shapiro from Sandton join us with their wise insights. But as you know, what is traditional on the show is whenever Mohammed Nalla comes in, we talk about ties. Did you borrow that one from David Shapiro's 70s collection?
Well, Dave certainly will have some of these, and that's good news because Paisley's making a comeback, right? So
you can wear all those old ties again,
I
David.
can, from the bowling club days.
You can even bring one in and bring Bruce up to speed.
I love Paisley. I think it's great. Do you remember those old green Paisley ties that your grandfather used to wear? Loved them.
There were quite a lot like that one. Yeah. All right, let's talk about what's going on in the markets. Remember the 2001 financial crisis moment? You were still in school, I think. But Sandton had this fantastic board along the side of the M1 motorway. They've got a couple of them dotted about. We got to a point where they ran out of digits on the currency. It went to 9.99 and suddenly there was no space. So they had to take down the currency sign and resurrect it about a month later with a brand new digital sign, which for the first time since then runs the risk, David Shapiro, of having to use 4 blocks. And that's worrying.
It is worrying. And there's nothing to suggest that it's actually going to go down. What we're talking about is the rand at 10 to the dollar. Yeah. And the worry is that it just seems to be nudging up there all the time. Usually, Bruce, after a run like we've had, the cavalry come in and there's always some kind of support for a market. It pulls back and that. But in this instance, it just seems to be on a one-way direction. And we're helping it along the way. You know, we're working hard to get it to 10, believe me.
No, we're trying hard.
We're trying very hard.
I saw a fabulous tweet. This time last week, we had Michael Yodano as a guest on Squawk. He was tweeting this week saying, if we were participating in the global currency wars, we'd be winning. Because we're depreciating far more quickly than anybody else.
Yeah, we're winning by default. I mean, we're just a whisker behind the Japanese, and the Japanese are aiming to double the size of their monetary base. So on a year-to-date or a 12-month basis, the yen's still out there as the outside currency. It's put into perspective, over a 30% depreciation on the yen since November. So the rand winning in that kind of context, certainly quite concerning.
But they're doing it on purpose.
Yes.
They're doing it on purpose. We're doing it, like I say, almost by default. We've got, it's almost a perfect storm. We've got a whole bunch of factors pushing that rand weaker. It's broken through successive technical rand support levels, and that's quite concerning. I mean, we certainly think it looks a little overdone over the shorter term, and we're expecting a bit of a consolidation. The problem is the higher it goes, the worse your best case scenario gets on the rand. And that's really the worry, is that South Africa can't really afford a much weaker rand for as long as we remain net importers.
But it's a two-lane highway, in fact, because on the one side, it's our poor economic fundamentals. On the other side, it's a stronger dollar. And if you look at the Aussie dollar, that's getting weaker. New Zealand, Canada also getting weaker. That's another aspect of the global economy. That's another shift. So we're being hit, we're driving down 2 lanes here.
And our politicians have had plenty of opportunities to try and calm the waters a little bit. I've seen some of the commentary from President Jacob Zuma's talk this morning. He gave a talk at 11 o'clock this morning in which he was saying mining is the cornerstone of the economy. Strikes are perfectly normal. Don't worry about it. Please get your talks. Please, they're normal in a democratic environment. Please get your wage talk sorted out as soon as possible. We're not taking sides between the AMCU and the NUM. Oh, and by the way, there are initiatives to support the mining industry.
Shooting miners also is something that's quite normal. It's okay. If they come with knob carriers and shoot them, that's fine. And that is very normal. It's so normal that it's scaring the hell out of foreign investors.
My sense is we're not fully grasping the gravitas of what we're dealing with here.
Yeah, the other problem, Bruce, very frankly, is that we're going into an election year next year. So the likelihood of government coming out strongly against the labor unions at this point in time is really a moot point. I really don't think it's going to happen. And so that perceived antagonistic relationship you've got between the private sector and government and unions on the other side not going away, and that's what's eroding that investor confidence.
Yeah, and
you know what worries me when government talk? If you take a step back and we actually look what's happening in the world today, have a look at that gold price. It's telling you a story. People are moving out of gold into other assets. The worries about safe haven assets are over. The super cycle in commodities, just China now downgrading its growth to 7% for the next decade. We're not talking about 10. Therefore, that huge, robust demand that we saw in the first part of this century is not going to be there. So you can't rely on prices to save our mining industry. You have to rely on efficiencies and productivity.
But I do like in her budget speech, Susan Shabangu saying we need a rescue plan for the mining sector. Jacob Zuma today saying there are initiatives to support mining. Mining doesn't need support. What it needs to do is be allowed to do what it needs to do in order to survive, to become competitive, so that when the cycle does turn, it's in a robust enough position to reinvest, to rehire, and to grow once again.
But there's just this complete standoff between Labour and the miners, you know, and the mining houses or the mining operators. And then you've got government on the.
Let's talk about things we can
Yeah.
we can control. Companies can control their profits, those that are not interfered with, and so we've seen some pretty decent numbers coming out in the last week. I have to ask you this one, and that is just how high can famous brands go? Results out this week, trading in the 90s. John Halamandaris, bless him, one of the family shareholders, he's been selling millions and millions and millions of rands worth of shares, all the way from $40, all the way, and still selling in the 90s.
Well, he's supporting a lifestyle in Greece, I think.
He supported Greece.
He probably is. I don't think they ever thought that they would generate, the Halamandris family, I don't think they ever thought they would generate this kind of wealth. In a way, and I hope I'm not saying the wrong thing, it's almost like the Chipkins when they sold out to Joffy, you know, Chipkin and Co. and Brian took over and did Bidvest. I mean, he just grew their wealth. So I like the company. I think it's a great South African success story. And listening to
Kevin Hedwig.
I lost it there. Just listening to him, he was disappointed in the results.
Yeah.
He said, you know, this is not a stellar performance. This was almost a mediocre performance.
Well, good. He's consolidating then with 18% growth. Mohammed, are you a fan?
Yeah, I think it's one of those stocks that have really done fantastically well. You got to ride that momentum higher, and they seem to be doing the right things. You know, their exposures to markets where, you know, if they see growth tapering off here, they're expanding into other markets. That's a big positive. It means that they're forward-looking. They're looking at growing this business, and that's something that can't be said for many other companies that are out there that are putting results out. So when you see a good news story like this, that's fantastic. Let's latch onto that.
You know what's interesting about it? It's the best food company. Don't look at it as a retailer. It's actually a food company. Yeah. Look at Tiger's results today. Disappointing. You know, they're patching Dangote together again. I think as they went in there, they thought, oh boy, what have we bought? But let's not go there. But if you look at it, they're a food producer. They're actually logistics. This is famous brands and that. And that to me is the excitement. A third of their profits come from that side of the market.
Now, when Kevin Hedwig 4 years ago made a very bold statement, he said, we will double the size of this business in the next 4 years, profit before tax. I asked him that same question on Monday, and I said to him, 4 years ago, you said you would double the size of the business in 4 years. Could you do it again? He says, well, I was going to say that the results presentation, but that would be seen as a forecast, and I couldn't possibly say it. He's planning to double the size of this business in the next 4 years. This is becoming, I suppose, what would be a very important swan song for him, because by then he'll be 66 or thereabouts.
And very rich.
And quite well off. He'll be able to afford Burger King by then.
He can do it. I think we have all misread that area of the market. No one believed. First of all, you've got the increase in middle class from 1 to 4 million, and they're all eating pizzas or burgers.
I was going to say to him, what is that round disc with stuff on top of it? He calls them pizzas.
Pizza.
Pizza.
It's a pizza.
What is it? Pizza.
It's a pizza.
A pizza, okay.
But I like the way you said. He also says A-E-N-C-I.
So you know. That's in my DNA.
A couple of quirks.
Tiger Brands. Are you worried about Tiger Brands? It's on a multiple of 17 times. The results didn't nearly justify the multiple. This one needs a re-rating.
And I think the market's doing that.
Yeah.
Slowly. I haven't liked them for some time. I think they were lifted by the Africa story, you know, together with our retailers. But I think slowly they've been warning about margins coming under pressure. And I think we need to look a little closer at the whole Dangote. You know, there's mixed views about this whole operation. And
what are your concerns on that front? So
just that I don't know whether it's, you know, without making the same reference, Abel bought Ellerines, and I thought it was a great business. So I'm not.
But you only truly know what you've bought once you've gone in and had a look in the storeroom.
If you read the reports today about cleaning it up and making it, you know, all these kind of words, you say, oh, what have they found there? It should have been the other way around. You know, they didn't find more than they were looking; they found less than they were looking.
That's always
all right. Let's look on to another part of the market which is massively contentious at the moment: unsecured credit. The Reserve Bank saying it's not particularly concerned, but the market has voted with its feet on African Bank. It's trading below 16 Rand. Capitec has got not under the same amount of pressure, but it is under pressure. And anybody with an unsecured lending exposure is getting hurt, Mohammed.
Yeah, it certainly looks that way. I think the Reserve Bank's comments, first of all, were around the stability of the financial system and the fact that unsecured lending makes up a relatively smaller component of the total lending pool. That means that it doesn't pose a fundamental structural problem to the rest of the system. That being said, I think a lot of those unsecured lenders ran up way ahead of themselves. Those stocks were looking very extended, and people were pricing in that rampant growth ad infinitum. And I think, you know, this was very much a reality check and perhaps a bit overdone. I mean, when you see Able and what's happened to that share price, it's been absolutely decimated. It's still trading quite poorly today as well. So I think on that basis, you're likely to see a bit of a knee-jerk reaction come through. But today's private sector credit extension numbers coming out, and I still think that the consumer is going to be facing considerable headwinds. We've got a raft of bad news, and that, you know, chips away at some of the outlook for that sector.
But on that consumer story, MMI, bless them, insurance company, nice and steady, nice and stable, don't rock too many boats. They come out with an update yesterday saying, look, I mean, we're growing new business, that's not bad, but our 2014 prospects, consumers, competition.
We're not listening to the story. That's what I'm worried. You know, when everybody's running for the door and Able, just make sure you're first out. Unfortunately, I wasn't. You know, I couldn't get out fast enough. And I think I'm very nervous about the South African economy. It came through in the GDP numbers, and each day we're starting to see more signs of a massive slowdown. And what was unsecured lending? It was the miners, it was government. They're not there anymore. So I'm nervous of it. I wouldn't touch it yet. You know,
So
you'll get
more downside there?
Well, it might not be more downside, but it's not going to have any upside. I think when these things happen in shares, you know, it's like the subprime. You know, when you start, what did Buffett say? When you find one cockroach, or I can't get it right, basically saying, you know, if you find one cockroach in the cupboard, there's usually more around there. He said it much more eloquently than that. But I mean, basically, I think there's more trouble in that area. I would hold back. I would go for a famous brand, you know, something like that.